Welcome to the Anchor Your Retirement podcast. I am your host. We're recording our first official show in 2026 with my buddy and pal, Tony Shore. Happy New Year, Tony.
Yeah, happy. Can we still say that? I guess we can because this is
We're
our
gonna.
first new show of the new year. Now, we recorded a show ahead of time last year that has run. You've
Yes,
been
we
running new
recorded a
shows.
few.
So this past week, we had a new show run, but this is our first recording of the new year.
It is.
And
But I got to see you this time last week. We were in Scottsdale eating lunch together.
we had a nice time, and it was great to see you and Eric and everybody. And just to let our listeners and viewers know, Barb is referring to the Gradient Summit. It's a big financial conference, one of the biggest years there,
Mhm.
where hundreds of the top advisors, financial advisors from all over the country get together and exchange ideas and pick each other's brains on what works for them. And I know you
Yeah.
were a part of that, and you shared a lot of what you do there to help the people you work with. And
Mhm.
I just think that's fantastic. I had a great time. They had some great speakers this year.
They
I
really
thought.
did. They
I thought
really
the
did.
speakers were really good this year. And they had some advisors talk as well. And I know you
Mhm.
love sharing. So I thought it was a great event. How about you?
I really enjoyed it. I think, I enjoyed Kyle Sheely as a
Kyle
guest
Sheely was
speaker,
my favorite.
and I actually saw him out in the hallway after and was leaving and got a chance to say thank you in person.
Oh,
So,
that's neat. What
yes,
a neat guy. I'll tell you, if you haven't heard of Kyle Sheely, look him up. He's an idea man. He's
he
creative, he's
is.
clever,
Yes,
and he's very, very intelligent and motivational,
yes.
and very encouraging to, run with those ideas, because even the craziest ideas pay off. And
Mhm.
people will try to put you down. Oh, that'll never work. And what are you talking about? Don't listen to him, he says.
No, no. And for those of you who routinely listen to us, you will notice that Tony and I are conspicuously not discussing football or sports, although I do have something fun to talk about with baseball. And that's because for the first time in 11 years, the Kansas City Chiefs are not in the playoffs. Um, so it's not a red Friday here in Kansas City. I'm wearing green.
Oh, that's too bad. And yeah, none of our teams are making the playoffs or doing that well. Actually, the Minnesota Timberwolves basketball team hasn't been doing too bad. Other than that, we neither one of us have a lot to talk about, especially with football. Neither one of our teams did very well this year.
No, but the Kansas City Royals, and we are a hair's breadth away from pitchers and catchers reporting to spring training.
Crazy. Time
Yeah, I
flies.
know, I know. They announced this week that they are moving the right and left field walls in about 10 feet, and they are lowering the height of the walls.
So yeah, I see. That's funny because I bet there's probably two reasons. My first reason is there will be more home runs because of this,
That's the idea. That's
and
the
that'll
idea.
make it more exciting,
Mhm.
and they'll have more room for more seating, and that
Yes.
helps also the team sell more tickets.
Yeah,
But the fact
they're
that,
adding about 230 more seats,
wow, that's
and I
really
guess
good.
they were talking about how the Kauffman Stadium is the highest ranked baseball ballpark for being a pitcher's ballpark
Ah.
because of the depth of center
The
field.
depth and height of the walls, so they're
Yeah.
moving them in. I heard there's a conspiracy theory out there that these new walls will be on, hydraulics. They'll have them hydraulics. So they're gonna be moved 10 feet in and lowered,
For the bottom of the inning?
when the Royals are up, but then when the visiting team is up, they automatically rise up about 5 feet and move back 10 feet. Is that true?
That is not true.
I mean, the Royals are looking for any advantage they can get, I guess, at this
But I
point.
find it interesting that they're making this change because they have already announced that in 5 or 6 years, they will not be in this stadium anymore. They announced a couple of years ago that they are leaving. We still don't know the location of the new stadium.
Oh. Well, they're
And
not leaving Kansas City. They're
they're
just moving. They're getting a new stadium.
they are hopefully not leaving Kansas City.
Oof. Yeah, I hope
Hopefully
not.
not leaving Kansas City. I would be heartbroken if
I
that
mean, where
happened.
else would they go? Topeka? Nobody wants to go there. I'm
Actually,
kidding.
Nashville.
Oh, Nash Vegas. Yeah.
Yes. But you know what one of the pivotal decisions has been for the Royals and where they are going to go has been taxes. How's that for a segue into today's show?
Barb, this is why you get paid the big bucks and are so well respected, because that was the greatest segue I think I've ever heard. And taxes is our topic.
Taxes is our topic today. Just a side note for the Royals, it's about getting taxpayer support for financing a new stadium.
Of course.
And there was some legislation that was proposed a couple of years ago that did not pass.
Yeah.
And so now they're trying to figure out what they're going to do with all of this. But you and I, we were talking before the show today, and we were talking, you brought up a really good point about taxes and whether or not people are preparing for their taxes or planning for their taxes, because those are two completely different things.
Yeah, people don't. I don't think people grasp it, and because I know I didn't until I started doing these shows and working with financial advisors and talking to you every week. And that is, there's a huge difference between tax preparation and doing your yearly taxes versus tax planning. And
Right.
most CPAs and tax people, H&R Block or your local accountant, they're going to do your tax person is probably who prepares your taxes each year.
Right.
And that's looking backwards. So I call tax preparation the rear view mirror, and I call tax planning, which is more of what you and your team do, I call that's the front windshield looking forward.
We're looking down the road and trying to create tax advantaged investments, strategies. I am all about us all paying our fair share of taxes. It's what keeps our national defense.
Sure.
It's what keeps our government running.
Yeah.
There is a need for taxes to be paid in this country.
Right.
However, I don't want to pay any more than I absolutely have to.
Yeah, you want to minimize that tax burden, especially in retirement. You want to make sure you're doing whatever you can to minimize your tax burden.
Right, because even though the one big beautiful bill that was passed earlier in 2025 makes the current tax rates permanent, I put air quotes around that word permanent because it's only as permanent until the next legislative session or the next Congress comes in or the next administration comes into the White House and says we need to make some changes with how we are collecting and assessing taxes here in the United States.
Right.
And the reality is the United States is spending roughly 25% more per year than they are taking in tax revenues.
Yeah.
And that's not a sustainable business model.
Yeah. Yeah, and that is not. And so taxes are going to have to go up at some point. It is great that we have to admit, I mean, it's great to be right now for taxes. We're in historically low tax brackets for federal tax rates. They're at historic lows. And for now, they're locked in, but that can change at any time. Congress can pass laws. The midterms could happen. New administrations could come in the future and change it. And even current administrations could have to raise taxes at some point in time. Someone has to. You can't keep kicking that 37 trillion or whatever it is up to now debt. You have to service it. So I think that's a good point you make, and you have to be aware of that and where you're gonna be as far as taxes in the future, right?
Right. And, being forward thinking about things. I am getting married again this year. And my fiance and I have had conversations about even whether we're filing a joint tax return or filing separate tax returns as married people, figuring out what makes the most sense from a tax standpoint and is to our greatest advantage. That's an example of tax planning,
Yeah.
as is taking a look at what you have saved in those pre-tax assets. All those years you've been contributing to a 401k, a 403b, thrift savings plan, and you've gotten that deduction. You haven't had to pay federal taxes on it. When you get your W-2 amount is lower than what your annual salary is, because there are deductions that come out before taxes are assessed. Things like your health insurance premium, your Social Security and Medicare taxes, the portion of it that you have to pay in. And if you are not contributing to a Roth retirement account and you're contributing to a traditional, you didn't pay taxes on that money going into the account. You have to pay taxes on the money coming out of the account.
Yeah.
But the question is when we pay those taxes and how we figure out if there's a way to help you save money over the long haul. If we can look at converting it to perhaps a Roth account, or look at some other tools that we have in our arsenal to create tax-free income for you to have later on in life.
That tax-free bucket in retirement comes in real handy.
It
And
does.
I
It
think the point
does.
you're making, just to clarify, the point you're making here, Barb, is that so many people have all of their retirement funds, or a lot of them at least, in a 401k or a TSP or a 403b, some type of tax-deferred account or a traditional
Mhm,
IRA. And
mhm.
all of those accounts, unless they're a Roth, all of those accounts are tax-deferred. So you get the tax break this year, which
Right.
lowers your taxable income for the year, which is great. And that's why a
Mhm.
lot of people love that. Hey, my taxable income is, I don't have to pay taxes this year as much because I'm putting money away for retirement. And that is important and that's good. However, when they get to retirement and start pulling that money out, it's all fully taxable.
Right.
All the gains, all that compounding interest from the last 20 plus years, or however 30 years that
Mhm.
you've been saving,
Right.
the principal, everything you pull out, the principal and gains, it's all taxable because it's never been taxed. And Uncle Sam. So I see so many people that say, I've got $1 million in my 401k or my
Mhm.
IRA,
Mhm.
but it's a traditional tax deferred account. And I'm like, no, you don't. 25 to 30% of that isn't going to be yours. And they're like, what do you
Mhm.
mean? I'm going to using that money in retirement. And I'm like, it's a
Yeah.
joint account with Uncle Sam.
And even more concerning is, especially when we're working with our federal employees who have a pension and they have saved 5, 6, 800, $1 million in their thrift savings plan,
Their TSP.
their TSP, and their pension and their Social Security cover their day-to-day expenses. And they come in here to visit with me and they are so proud of the fact that they are just going to let that money sit and grow until I show them what the effective compound growth is in how much that account is going to grow until they reach either age 73 or 75, depending on whether you were born before or after 1960, is
Sure.
when you have to start taking those required minimum distributions. And when I show them what that required minimum distribution is going to be on what we project the balance of that TSP to be at that time,
And how much of it goes to Uncle Sam?
right? I mean, they choke.
Yeah. they're like, wow, it's gonna put me in the highest tax bracket. And then if you're in the highest tax bracket, IRMA kicks in and your Medicare premiums go up.
IRMA kicks in a lot lower than the highest tax bracket, Tony, and
Well,
that's
that's
something
true.
else that other
Yeah.
people have to consider. And for those of you listening that don't know, IRMA is not your great aunt that comes over to visit. It is the income adjustment. Your Medicare Part B premium increases if your adjusted gross income goes over a certain threshold.
Yeah, which it will if you have all this other form of income, and your Social Security can then be taxed when you're
Right.
taking out that money. Or maybe you need to RMDs, of course, then you have to take it out. You have to pay
Mhm.
taxes on
And there are
that
people
amount.
that there are people that save for retirement with the intent of spending that money, and that's what it's there for. I
Right.
don't think that you should sit there and live on beans and
No.
rice and your Social Security check and not spend what you've saved. But if there's ways that we can look at paying taxes in advance so that we've got a tax-free bucket of money later on, because that tax-free bucket doesn't count toward IRMA in certain circumstances.
Yeah. Yeah, and
So
that's
we're talking about saving money in more ways than just that income tax.
yeah. Yeah, and that's true, and I think, also, it's the old, and you hear this all the time, but it's true. Would you rather pay tax on the seed or the harvest if
The
you're a farmer?
harvest,
And
yeah.
obviously, you might as well pay it now while taxes are low, convert some of that money maybe to a Roth, get it out of those tax deferred accounts, pay the taxes now, get it into a
Mhm,
Roth so you have money in that tax-free bucket.
mhm.
And now even for, federal employees, Barb, is there, is there a Roth option with TSPs?
Starting January 28th, there has been a Roth option in the thrift savings plan in the
Yeah,
TSP for a long time.
sure.
Starting January 28th, they will be able to convert traditional balances to Roth,
Wow, yeah,
but there
that's
are a lot of moving parts with that.
yeah,
The podcast before this goes into some of those details, and basically, can it be done? Yes. Do you want to do it unsupervised without somebody giving you some guidance? Absolutely not.
yeah, yeah,
It is everything from having to pay the taxes from an outside source to realizing that the amount you convert is going to affect your adjusted gross income
mhm.
for that year and your taxable income for that year. And you are starting a 5-year clock when you do those conversions as to when you can access those balances, be it the seed or the growth, tax free. So, looking at this and doing those Roth conversions, while it might make sense, it also might not.
Right.
And that's why people need to work with a fiduciary who actually understands how to do some tax projections and some tax planning and see what makes sense for your unique situation. As I say about every other podcast, I am an advisor. That doesn't mean I'm your advisor. And even if I am your advisor, you need to come talk to me before you go do any of this.
Yeah, because everybody's situation is different I know you point that out over and over on the show, but people need to understand that, hey, your situation might be different, and then your neighbors, your friends, your families, your coworkers. Don't just do what they did, and don't think, oh, Roth sound great. I need a tax-free bucket. Let's do this. Don't do anything without talking to a trusted financial
Right.
professional, a
Somebody
fiduciary.
somebody who takes the time to figure out what your financial situation is and what you think it's going to be.
Yeah, and at BG Wealth Advisory, you and your team there, Barb, you work alongside tax professionals because the current year tax situation and next year's tax situation, or before the end of the year, you do want to look at, oh, here's how I can minimize my tax burden for the year.
Mhm.
But you also want to look at, is what I'm doing this year the best going to affect my taxes in retirement?
Right.
And, looking ahead to your retirement, or whether it's 3 years, 5 years, 10 years, 20 years down the road, that has to be a part of your overall financial plan and retirement plan, doesn't it?
Right, and we need to look at this tax planning from a generational standpoint.
What
You
do you
know,
mean by that?
the flip side of this is that those pre-tax dollars that you don't spend, that get passed on to somebody who is not your spouse, they're gonna have 10 years to liquidate that money
And pay taxes on all of it,
and pay the taxes on all of it
unless it's a
and
Roth,
figure
yeah.
out what to do with it.
Yeah.
And for now, they don't have to pay taxes on the Roth, but they still have to take it out in 10 years.
Right. Right, but it's the tax burden you might be leaving loved ones, where
Right.
you have to look at what that money is for and what type of account it's in. If it's for loved ones and you're proud and you're gonna live
Mhm.
off, say, a pension or Social Security and maybe some other money, and you want this money to be passed along, you wanna work with a financial professional
You
to make
really do,
sure you're not
because
leaving your loved ones in a bad situation, or yourself, right?
and, not only are we looking at, the next, the non-spousal, your kids having to pay those taxes, but when they pull that money out, it increases their adjusted gross income. If they've got kids that they're trying to get some kind of financial aid for college, that can really end up throwing a monkey in the machine that we weren't expecting and can implode a lot of plans.
Yeah. Yeah, yeah, it can, and you
If
don't
you
wanna
give a mouse a
derail your
cookie.
yeah, you don't wanna derail your retirement because of
No.
it, or, cause family disharmony or discord.
Yeah.
Yeah, yeah, and so the key element in all of this, the way I see it, is Barb. Make sure you're working with Barb or a trusted financial
Mhm.
professional who you know is a fiduciary and
Mhm.
does the holistic plan, looks at everything. I think that word is overused. Oh, we do holistic planning. Everybody says it, but do they really do it?
Right.
Are they looking at healthcare, minimizing your tax burden, Social Security, federal benefits, pensions, 401ks? Are they looking at everything? Inflation, interest rates? Are
Mhm.
they taking that all into consideration, investments, making it part of the plan? And that's what you do for the people you work with, and I
Yes.
know you love hearing from our listeners and viewers out there.
I do. I do. It is a blast when they reach out
Yeah.
and, in fact, I even had somebody, stop me in the grocery store the other
Oh,
day
that's
'cause
awesome.
yeah, because they had seen a video or seen one
Yeah.
of our print ads or
Sure,
something, so
sure. Yeah, I mean, that's always interesting. I mean,
yeah,
maybe you wanna buy groceries, but, it is nice to
just a
know
thought, yeah,
people are out there. I
yeah.
love that. But for anyone watching this or listening to this, how can they get a hold of you to get that plan in place and make sure they have a tax plan that looks forward?
They can always go to our website, bgwealthmanagement.com. Or you can call us at area code 913-553-6222 and select the option for appointments and scheduling. I think that's option 4 on the prompt. And Christina is our primary scheduling person. She herds all the cats that are me and keeps track of my calendar. And she'll get you on the calendar with either myself or one of our other qualified fiduciaries in the office.
Awesome. Well, Barb, great show today. A lot of great
Yes.
information, and there's always more. You can get deep in the weeds with taxes, but don't
You
go it
can.
alone, right?
No, please don't.
Yep. And again, 913-553-6222 is
Yep.
the number. And Barb, great show today.
Thanks,
Listeners and
Tony.
viewers, thanks for tuning in. Yeah, that does it for today's episode of Anchor Your Retirement with our host, Barb Golan.
We'll see you soon.